day all. Ira Epstein of Linn Associates with your agriculture update, and we are now on Tuesday, and this is the 26th of March, 2019, getting on just after 2:40 p.m. Central Daylight Time. You know, the words you're going to hear now for about couple of weeks going forward are the trade deals, not only between China and the U.S., but Canada, the Mexican deal. The Trump administration is now fighting to get the Republicans today under the banner so that they can get this trade deal with Canada done. Canada pushed back wisely and told the U.S. enough with the tariffs on the steel. We've agreed to a deal. They should be coming off. And now we'll find out just where this is all going to push them. As for the U.S.-Chinese trade deal, remember that we have Steve Mnuchin, our Treasury Secretary, and Mr. Lighthizer, our trade representative, headed to China this weekend. And then the Chinese come back next week, and we're hoping that in the next 30 days or so, something can get done. Sort of like the Mueller report. It's the never-ending cycle of when do things get done. In the meantime, stock markets today up a little bit, not doing an awful lot, unable to hold earlier gains, but still up. And in the grain markets, the market is obviously starting to talk a lot about Friday's USDA supply demand and the acreage reports. Where are we at with everything? And I think you're seeing a certain amount of that come into the market right now. When we look at a weekly area chart of closes of soybeans, you can see you're fighting at this 18-week average of closes. That number is 904.25. You finished down so far for the week 3 cents at 903.75. When we look at the daily charts here and you put on the swing line, you have a pattern that's still in effect of higher lows, higher highs. The problem is if you take out 8.99.25, you end up with a higher high and a lower low, and that would probably mean no trend play in place before Friday's USDA report. As for the battleground, well, how many days in a row have you hit the 18-day average of closes? And you so often hear me refer to that as the line in the sand. And if you watch it, you get a feeling and you can understand why that is, because when you look at that and then you put on Bollinger Bands, you're starting to see how the top one is falling down. Look at how it's trailing here. The bottom one just going sort of sideways at this point as volatility, because the market's trading within that range, comes out. And part of what the Bollinger Band looks at, of course, is the volatility. When we look at where the momentum is, it's sort of flattened right here. So we have a market that's got what? The swing line is up, but because prices closed under the 18-day average, the bias is down. The two fight each other. You have nothing there. And if you're looking for momentum to lead price, it's gone flat on you. Difficult market. In the soy meal, the market is overbought. That is the first phase I look at. When you look at the slow stochastics, you've got one of the numbers over 70, the other over 80. In order to embed, which means they convert from overbought to locking in a trend, both would have to be going sideways over 80. You don't have that. So you're in an overbought situation where if I come back here, I think we said yesterday, on the pullback, we might see the 100-day average act as a support. That didn't work today. The market sliced right through that. So if it goes anywhere, I'd be watching in the meal the 18-day average of closes. The problem there is going to be it's very, very close to the last swing break low. The problem, though, isn't even that. It's that you're overbought. So in an overbought condition, do traders add to longs? Well, when you're going sideways like that, most times not. Doesn't mean it can't happen, but most times not. Soy oil has been running the lower Bollinger Band. And as it's happening, this is what the embedded reading looks like. It's the flip-flop of being overbought, but now it's converted. So at first you were oversold, and then you converted and locked in the downtrend. Until the red line's over 20, I still look for the market to be met with selling pressure on rallies. In the corn market, you've gone from a Bollinger Band bottom to a Bollinger top. Now, what's important about Bollinger Bands? What's important is that the algorithm is designed to keep the market trading within the bands 95% of the time. Therefore, the first hit of a band is often met with what? Short covering if it's the bottom band, selling if it's the top band. That's how I view it. Then after that, it depends what the slow stochastic does. If the market embeds, well, that's one thing. Here it didn't embed. The market was basically in an oversold condition, bouncing. And if you ran, say, a 3-day moving average or a 4-day moving average of highs, you were probably hitting into that zone. And the reason is that the market, as it keeps hitting, it's finding resistance from those numbers. In the wheat market, you've gone up today and finally hit the upper Bollinger Band. If you look, 478 was the high. I think the pros took money off the table on the first hit of it, and it backed down on the close to 469 1/4. If we take a look at the slow stochastic, both numbers today finished over 80. Yesterday they were not. You're just overbought. It's that simple. So you have an overbought market that's hit an upside target in an uptrend that became overbought. In the sugar market, this market's now got 1, 2, 3, 4 days in a row of fighting either side of the 18-day average of closes. Resistance is 1275, the 100-day average. Support's 1246. If the market can get under 1233, well, then it could start a run to the downside. Why do I say that? The reason is, and by the way, it doesn't have to begin the run, is because you've already got the swing line down with lower highs, lower lows. That would just add another level where this swing line high would move down there. I'm not saying it'll happen. I'm saying that's where you're at. Actually, this chart today lost direction. Why? The settlement's over the 18-day average. Momentum has gone flat and the swing line's down. It's a big nothing. Could it become bullish here? The way that I chart, the answer is no, not right now. And the reason is, assuming it rallies and even gets through the 1280 level. 1286 is the upper Bollinger Band. This combination of the 100-day average and that are pretty formidable. And you would have a lower low and then a higher high. So it's easier to be bearish on the chart, but in all fairness, the bears lost control of this chart today. In the coffee market, we have a market that got oversold, momentum's picking up, price is picking up. If it takes out 98.30, I'm sorry, is that 96.30? I think that is. That is 96.30, right. Then I'd look for an attack of the 18-day average of closes. The problem for those of you that want to be bullish is this market's been unable to close over that line in the sand since back here at the early part of February. And even then, it kept getting thrown back at the upper Bollinger Band. It took this to happen with an embedded reading, and then the market went into this bearish trend. In the cocoa market, you rallied up today. Now let's go to yesterday. If you rally from here, I'd look at the combination of the 100-day average and wherever the Bollinger comes in band as the resistance. The market on the close of business lost its way, sort of like sugar. The market closed over the 18-day average right here. So while you had the swing lines down, lower lows, lower highs, momentum turned up on you. That hasn't happened yet in sugar, but the bias did turn. Today the market made a run for these numbers. Somebody else was looking at them apparently, and it backed off a little bit. You're out of your downtrend. You're not in an uptrend. In the cotton market, you are still in a bullish uptrend. In fact, the market's trying to add momentum to it. If you look at both numbers, they're over 80. They were over 80 yesterday and the day before. That means you're embedded. Until the red line closes back under 80, I say that on breaks, the bulls will be stepping into the market. And if it loses the reading, then price, and at first the 100-day average become a target, and if it extends from there, could be the 18. In the cattle market, you went down yesterday to the 18-day average of closes. As you can see here, the market's got downside momentum. Today it closed under that number, but we're not in a trend. You have a higher high, lower low, bias down, momentum down. In the feeder cattle market, you still have a longer-term uptrend that is in a correction stage. What's happening is these numbers are working to get under 70. My theory is when the numbers are under 70, they're not overbought. Some people use 80. I have a different set. I also look now for the support. How's it going to show up at the 18-day average of closes? Should that give ground, then the 100-day is waiting for the market. You'd literally have to get under 145.87 to really break the trend. So a correction. In the hog market, notice that when you have an embedded reading, until you lose it, breaks in the market are very shallow, and my theory is that on the breaks, the bulls are stepping into the marketplace. So one of the things we do, especially if you're a grain trader, is our firm really is very heavy into writing about the grain markets, the meat markets, the soft markets. You'll find that what we do covers all these categories. I actually write a lot about the financials, and people get my subscriptions, they see what it is, and I'm pretty heavy into that myself. But our firm is phenomenal in all these other markets. I'm not saying they're not good at that, but I write a lot more than most people do. If you'd like a free trial of what Linn Associates does, be happy to give it to you. You'll see what our hedgers get, what our clients get, our options traders. This is where it comes from. Either call my staff, they'll set it up for you. You can go to our website. You'll see that we have a carousel of free offers. Click on it. You'll be able to choose from there, or click right up here. If you're watching me on YouTube, it'll take you to that page. I'm Ira Epstein. You have a great day.